This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very happy Thursday, everyone. Good afternoon across Bloomberg platforms. This is Bloomberg Businessweek Daily. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City. Hey, we got stocks bouncing off their lows. I've been watching yields. We did get an inflation print earlier today. At the longer end of the yield curve, we are seeing yields a little bit lower, shorter end, maybe a different trade.
Yeah, we're going to have more from Charlie in just a minute on the trade, but the Dow is up 0.4%. The real action, though, happening in tech stocks. The NASDAQ up 1.7%. The S&P up a full percentage point, Carol. And if we take a deeper dive in there, only energy, real estate, and consumer staples are in the red.
You know, it's funny that you say energy. We're going to get to that a little bit later on this hour. What I do want to say is that on the trade, we're going to kind of dig into all of that. CPI, Micron Technology soaring in today's session, bringing up most of the chip names. We're going to get into all of that that's coming out to investors. Get a look on the trade.
Yeah, investors, too, I think have a lot of questions going into next year. We got Jason Granet stopping by in just a few minutes. Chief Investment Officer over at BNY. He's got 6 for 26. These are essential questions, but also maybe some answers for investors.
Yeah, looking forward to that. Frank Sorrentino will have some answers as well. He's founder and CEO of ConnectOne Bank. Great read on small business, great read on construction. Curious to see, too. We talked to him just after the November election, so curious to see what he has to say about residential and housing and costs, again, in New York. We've talked about this with him in the past.
Yeah, he's going to be joining us a little later this hour. And you mentioned energy, the reality of energy and sustainability. The CEO of Honeywell Energy and Sustainability Solutions joining us a little later, too.
Pretty cool stuff coming your way in the next 60 minutes.
Funny how that works. Got a great team who puts
really
it all together for us, right?
Thank God for them.
Yeah.
Hey, also thank God for Charlie Pell. Let's get a check on the trading day. Here he is, right here in New York.
All right, I thank you very much. Focusing right now on what's happening with U.S. markets, higher across the board with the Dow, the S&P, NASDAQ, all advancing. Will the gains stick? Stay with Bloomberg Television and Radio right into the close to see how things shake out. But right now, S&P up 67. It is a CPI Thursday. We're looking at a gain now of 1%. Dow Industrials higher by 158, up 0.3. NASDAQ up 366 now. NASDAQ up by 1.6%. The Bloomberg Mag 7 Index higher by 2.3%. 10-year, 4.12%, with the 2-year currently yielding 3.47%. Gold, little change, down 0.2%, 43.29 the ounce. West Texas Intermediate crude up 0.7%, 56.31 a barrel. And Bitcoin right now retreating by 0.3%, 85,675 on Bitcoin. Bottom line here, stocks are advancing as a cooler than expected inflation report lifts hopes that the Fed will cut interest rates further. Right now, looking at wheat stocks, they are higher. We've got shares of Canopy Growth up by 5.2%. Tilray right now up by 1.1%. But interestingly, the marijuana ETF, the Amplify Alternative Harvest ETF, ticker MJ, it is down by 6.9%. President Trump saying his executive order on marijuana will make it far easier to conduct related medical research, and that his administration will ask Congress to reconsider its classification of hemp-derived CBD. The president saying his order will not legalize marijuana in any way. Again, recapping, stocks are advancing, S&P up by 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, Micron Technology, man, that stock is soaring in today's session. We saw that play out after it reported late last night after the close. The stock right now, Tim, is up about 13% in today's session. Company came out, rosy outlook, thanks to the AI boom fueling demand for memory chips. So it pushed up the Philadelphia Stock Exchange Semiconductor Index with it. The stock's up more than 4% at its intraday high today.
Yeah, 12.7% where it is right now, higher. That's pretty good.
Yeah.
What about 200% for the year?
That's like what?
Pretty unbelievable.
Unbelievable outperformance. I was looking at it is about 1.5% of the Nasdaq 100, just about 0.5% of the S&P 500, but about 7% of the SOX. So I'm just trying to look at where it's being felt here in today's trade.
Okay, so that's the micro from Micron.
Yeah.
The macro, this morning's read on U.S. inflation, CPI showing underlying U.S. inflation rose in November at the slowest annual pace since early 2021. The data, though, Carol, a bit muddled thanks to that, U.S. government shutdown.
All right, add it all up. We have stocks bouncing around a little bit. We did see a rally earlier on, and we also did see yields, most notably at the longer end of the yield curve, moving lower. Let's get our market roundup, and for that we head to Ed Harrison, senior editor and author of the Everything Risk newsletter. He's in the Bloomberg News Washington, D.C. bureau. Ed, good to have you here. Markets are bouncing around a little bit, but we did see a rally, and we still are up about 1.6% on the Nasdaq 100. Do we just say, thank you, Micron? Thank you, CPI? It feels like Micron has a lot to do with this.
Yeah, I think you're right, Carol, because Micron was up 14% pre-market, and now it's up 13%. So it's basically held onto its gains, and even before we had the CPI. That's what the situation was. The CPI only helped that, but the CPI, it was a bit dodgy, the data, to be honest, because of these imputed prices, and I can go into some of that with you.
Yeah, let's do that. Why is it murky?
Yeah, so owner's equivalent rent in particular, shelter is the biggest component. I looked at the numbers, and if you look at the actual number for August and you compare that number to for September and compare that to November, you get an annualized increase of something like 1%. Now, if you go back and you compare September to July, you get an annualized increase of 4%. So what's clear that happened is that they did something to make the October number the exact same as the September number, and then they based the November number off of that, which artificially lowered the shelter cost, which is the largest component of CPI. Now normally you would think that would come back out in December, but the reality is that owner's equivalent rent is only calculated once every 6 months. So the next survey is January or February, which means essentially that these numbers, this zeroing out of October, will be carried forward for another 2 to 3 months.
Ed, forgive us. We've got to run to the White House, the Oval Office. President Trump signing an executive order in terms of the reclassification of marijuana, but he is also taking some questions from reporters. So let's listen in. All right, everybody, you've been listening to President Trump there in the Oval Office. The main order of business for the day was about signing an executive order on the reclassification of marijuana, which is why you see cannabis stocks certainly rallying in today's session, making it easier, certainly in terms of access and for businesses. But having said that, as he often does, Tim, taking questions from reporters on a range of topics.
Yeah, including the Federal Reserve. He said talking to 3 or 4 Fed chair candidates. Every one of 3 or 4 Fed chair candidates would be great. He said Michelle Bowman is great. He said he'd be making a decision very quickly on the Fed. Then a few minutes later, that he said that decision would come probably in the next couple of weeks. Fed chair announcement over the next couple of weeks.
Yeah, she and Chris Waller were the two that were kind of singled out in that conversation as a result of questions from reporters. Michelle Bowman, of course, vice chair, member of the Board of Governors at the Fed. And so, yeah, we're keeping an eye. We are expecting that decision maybe before the year wraps up. All right, folks, just a quick check on the market trade, if we may, because we are seeing stocks bouncing around here. Just up about 57 points, up almost 0.9% in the S&P 500. Nasdaq 100, some outperformance there, up about 1.6%. We've talked about Micron Technology soaring, bringing stocks up, and really the overall tech sector. And then we had that CPI print, but Ed Harrison got cut short of Bloomberg, but sending us and reminding us that there are a lot of caveats to that report. So we're still waiting for maybe some really clean data that wasn't necessarily impacted by the government shutdown.
Yeah, I would encourage everybody to check out our live blog, our Markets Live blog on the Bloomberg terminal for all the updates, not just today, but every single day with all the market moves. And Ed has a blog post coming soon there that explains the inflation. just the challenges with the most recent report
Yeah.
and sort of the intricacies and the nuances.
Which is why all of our, earnings reports have been so important in terms of getting some color from CEOs. But we're just about done with that, and we're getting ready for a new one come January. Hey, we want to stay, though, on the markets and the outlook. We've got a great guest to do that, and also to get into some new research that they had out late last month, 6 for 26, essential questions for investors. Investors probably have a lot of questions going into the new year. Back with us is Jason Granet. He's Chief Investment Officer of BNY right here in studio. How are you?
I'm great. How are you? Love the new studio.
Thank you.
Very cool.
We're kind of loving it too. How are you loving kind of the market environment right now, and how are you thinking about the new year?
Yeah, so if I go back and think about this year, and we were at the beginning, you think about all the wild things that happened. We went through the new administration, liberation. People forget that the U.S. military was engaged in a war back in the spring. The one big, beautiful bill in negotiations, the long government shutdown, these mega AI deals that happened over the course of the year. And what happened? Kind of what everyone thought would happen. Policy rates are a little bit lower, risk assets are higher, but it was very nonlinear. And so if I think about 26, I think it's probably going to feel somewhat similar. There's going to be weeks, maybe months, that don't feel that warm and fuzzy, but pretty strong backdrop. You have the stimulus coming from the one big beautiful bill.
Will that be inflationary, though, and cause some problems perhaps for the Fed and the next Fed chair, whoever that may be, he or she?
So, I mean, look, we're talking a lot about the inflation data today and questions around it. Obviously, the headline was softer, but markets are not reacting, believing that the underbelly of that data is as clean as it could be from a hangover from the shutdown. I'm not convinced that it's going to be super inflationary. It could be a little... It could put a little pressure against it, and I think, but if you look at where policy rates have been trading for the end of 2026, no matter what we've talked about, all those things that happened, all the questions about all these different Fed people, they've been right between 290 and 310. And so the market kind of has this credibility around where it's heading, no matter all these kind of balls that are thrown at it.
Well, I wanted to just talk about the Fed a little bit because the president did say he's speaking to 3 or 4 different candidates. If you look at Polymarket, for example, the money's still on Kevin Hassett, but Kevin Warsh is a close second favorite. Christopher Waller's on there too. Michelle Bowman, who he mentioned, is still only at 1% at this point. Does it matter to you, of those 4, who gets picked?
Yeah, so we've had a lot of names. I think there were 5, then there were 1, now there's 4. Back to my point, markets seem to be anchored at a certain point, no matter where the winds swing on these choices. What I would say is we're still talking about a committee. We're still talking about consensus on a committee. If you look at the dots that come, it looks like a scatter plot. There's a lot of work to do to bring people together. So while I think that it does matter ultimately over a long period of time, obviously who the chair is, if we're talking about the near term, this is about building consensus, getting the views, and quite frankly, this is a tricky environment. You know, Carol, you raised the underbelly of inflation.
Yeah.
We had the labor market that's a little weak. These are tricky times for both the Fed and global central banks, quite frankly.
All right, so you guys have whittled it down to 6 for 26.
Well, we
tried. Was it hard whittling it down to 6?
Yeah, look, I mean, we tried to catch the big themes that are out there, right?
Yeah.
And, you know, obviously central bank, obviously the dollar, obviously AI. We try to capture all those different things.
Let's go through a couple. Can
Sure.
the global economy maintain its delicate balance through 2026? And you just talking about forces balancing toward growth acceleration, and I guess those that might not be towards that.
Yeah, look, it's fragile. This is what we're talking about. I mean, we think that it can maintain our conviction when we went through and did the work to put that out, as we think that the tailwinds continue to outweigh the headwinds, but there's some fragility.
Yeah.
The labor report showed you that it's kind of not every sector with strength. Obviously, the questions about the inflation data, where things are happening. You know, we think it does have the support behind, but it's more a closer call than not.
Jason, we're going to jump around a little bit in the report.
Please.
The question that you have posed, I think a lot of people have right now when they look at the U.S. equity market. Are U.S. equities overvalued? Yes or no?
Yeah, I mean, obviously, this is everyone's
Are
question.
some overvalued?
And what I would say is there's always some that are overvalued and there's always some that are undervalued.
But are there some more right now than usual that are overvalued?
Yeah, look, there's a lot of price for perfection in the market in certain sectors, right? That being said, we are getting some stimulus that's coming into the market next year. We do have easier, not tighter monetary policy on the horizon. We do have fiscal stimulus, corporate tax benefits that are there. I think a lot of it's in the price, but we think there continue to be a little support on risk assets here into next year for sure.
Jason, what do you do? Who do you talk to? What is the research that you guys look at to figure out whether the AI trade, the AI spend, the AI build out is getting frothy? Is it just a case of looking at valuations, or who do you talk to kind of get an idea?
So you can't just look at valuations. These are new technologies and new horizons where on some level the raw valuation doesn't really matter as much as what are the fundamentals, what's the forward of the different projects, what partnerships. You're seeing all these partnerships come out. So there's a whole series of strategic alliances that are going to be developed over time.
Are you comfortable though with the circular financing and complicated relationships and kind of cozy relationships?
Yeah, look,
it feels
I'm a bond guy, so I'm always a little nervous. That's how it works.
Hence, so are those folks when they look at Oracle, right, and what's going on in their balance sheet.
Yeah, I think what you're seeing across the horizon is that we're starting to sift through and think about who some possible winners and losers are, but this is a long game. If I think about back in the spring, people were questioning Google. What's going to happen to search? What's going to happen in that ecosystem? Now people see Google as maybe the biggest winner. So these things can change very, very, very quickly. And I think that we're early enough, and we have a little chart that shows how early we are kind of in the journey here. And that's what I think it's important for folks to remember. We're early days in whatever this AI adventure will be. It's not going to be all highs or all lows, but there's going to be some sorting that goes through.
What's the risk? The main risk for 2026? What gets the train off the rails?
Yeah, look, like I said, there's a lot of fragility. I think obviously for the Fed and for policy here in the U.S. is clearly the labor market. You're seeing a lot of unevenness across the labor market. Growth is strong, but probably slightly below potential. So is there a point where taking folks out of the labor market brings growth down and that starts to fall further below potential? And then, look, we've had rate cuts last fall. We've had rate cuts this fall, and we still have 10 years that won't get off 4%.
Yeah, exactly.
And so, to me, that's something that has to manifest itself through the economy still as well.
Yeah, it's so funny because we had dipped below for a moment, it felt like, and then we had some guests maybe even talking about moving, closer to 3, and yet here we are at 4.1, and we're sitting there for a while.
Yeah, it's pretty stubborn there.
Well, you said, you're a bond guy. So one of the things that you guys are talking about, the 6 essential questions for investors, how are diverging rate paths shaping fixed income in the U.S., Europe, and emerging markets? And this is on a day where the BOE and ECB reined in with rates. We get a decision from the Bank of Japan tomorrow. We had the Fed recently. There are diverging policies among some central banks.
And Carol, I would say beyond diverging policies, the agreement is not there. The Bank of England had a 5-4 vote, very tight. As I said, look at the dots, it's all over. The ECB, listen to what they're saying. It's not everyone is student body right, student body left at all these different central banks. So not only do you have different speeds across these, but you also have inside, there's still some sorting that happens. So when you ask about the risks and the things, you can see the confusion in the market, and even from the experts who make these decisions.
So it could go a lot of different ways in 2026.
Yeah, let's have fun. That's what makes this fun to do.
It does sound like there's a consensus that we got to keep our watch on Washington, whether it's policy out of the White House in so many different ways, or policy over, monetary policy from the Fed. There's a lot that's going to be coming our way that way.
Yeah, people are policy, and so you got to listen to what the people are saying. They push it through, and that's what happened this year, right? They drove all these undulations, but if you talked about where we were at the beginning, I think we are where we thought we'd be at the end, but it wasn't that smooth.
No, and there were points where you never thought it was gonna end out this way.
That's right.
Jason, happy holidays.
Happy holidays. Great to see you. Enjoy your break.
We'll see you in 2026.
Okay, see you in 2026. Best everybody.
Yeah, same to you. Jason Granet, Chief Investment Officer at BNY, right here in studio.
Hey, coming up next, we're going to talk about financials as a whole. They're up 13% so far this year. If you get more specific, the KBW Bank Index, it's up close to 30% year to date. Frank Sorrentino from ConnectOne Bank Corp is going to join us next. In the meantime, though, a check of the day's trade and top business business stories. Here he is, Charlie Pellet.
Hi, thank you very much. And here's what's going on. We've got the Dow, the S&P, NASDAQ all advancing. 90 minutes to go ahead of the closing bell. And, of course, coming up after the close of trading, we'll be hearing from FedEx and Nike, Bloomberg Television and Radio. We got you covered as those stocks break. S&P right now up 59, gain of just about 0.9%. Stocks are advancing as a cooler than expected inflation report lifts hopes that the Fed will cut rates further. The Dow up 130, up 0.3%. NASDAQ up 1.5%. The NASDAQ 100 index up 1.6%. Small cap shares taking part in the party. They're up by 0.9%. But the outperformer right now, our Mag 7 index, the Bloomberg Mag 7 index up 2.1%. 10-year 4.11%, with the 2-year currently yielding 3.46%. Gold down $4 the ounce, down by about 0.1%, 43.34. West Texas Intermediate crude up 0.4, 56.15 a barrel, and Bitcoin now down 0.4, 85,590 on Bitcoin. You heard it on Bloomberg Television and Radio. President Trump signing an executive order directing his administration to move cannabis into a less restrictive federal category, setting in motion a regulatory shift that could alter the legal and commercial landscape for the drug nationwide. The order instructs the Justice Department to begin the steps needed to shift cannabis to Schedule 3, a tier reserved for drugs with accepted medical uses and lower abuse potential. Now, we do have the marijuana ETF. That is the Amplify Alternative Harvest ETF, ticker MJ. It is down by 5.9%, but among individual marijuana stocks, weed stocks, Canopy Growth up now by 2.8%. Tilray is advancing by 2.1%. And sources tell Bloomberg UBS is set to begin its latest wave of job cuts in mid-January. UBS shares up now by 2.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, Bloomberg has reported out, as have many other news organizations, something you and I have talked about a lot, Tim, about how some, including...
Or you could just open up the app formerly known as Twitter, and you can just see this.
This is true. It's about how some that are wealthy and just some in general are concerned about some of the priorities of incoming New York City Mayor Zohran Mamdani. On that, we caught up with Kathy Wild, outgoing president and CEO of the Partnership for New York City. They represent a lot of the city's corporate leadership. So we're talking about real estate developers, PE firms, banks, law firms. By the way, Bloomberg LP is a member of the Partnership for New York City. Kathy Wild, also part of New York City Mayor-elect Zohran Mamdani's transition team, and she addressed some of his policies that he campaigned on, including higher taxes. Check it out.
You may raise the rates of taxes, but that may not result in more revenues if you scare people away, or if you scare companies away, or as we've seen lately, we're seeing a real threat to jobs in New York. We, for the first time in my experience over 50 years, are seeing a decline in the number of jobs in our financial services industry. Scary thing, that's 40% of our state income tax revenues. We don't, I mean, these are, you know, we've got to pay attention, and I think he gets that. But we've got to be at the table discussing these issues and helping figure out how do employers help solve the child care problem.
That's Kathy Wild, outgoing president and CEO of the Partnership for New York City, also part of New York City Mayor-elect Zohran Mamdani's transition team. Carol, curious what our next guest has to say about all this.
Yeah, great to have back in studio Frank Sorrentino, chairman and CEO at the publicly held New Jersey-based community bank, ConnectOne Bancorp. They are the parent company of ConnectOne Bank. Great to have you here. How are you?
Great to be here. Great to be in the new studios. Fantastic.
Thank you. Yeah, we've been working on, real estate around here. Tell us about the environment. You are kind of consistently optimistic and have been a lot over the past year. Is that still the case?
I'm very, very optimistic about where we are.
Yeah.
And especially the journey we've taken this year to get here. It's been quite the roller coaster, up and down. And we certainly didn't start the year in the same place, but I really felt the foundation was there for a very solid end to 2025. But that foundation now has really created, I believe, an unbelievable ramp into 26. And I think we're going to have a lot less of the noise that we heard during 25 and more focus on how this economy is building strength as we move through 26.
I want to go to what Kathy Wild was saying about concern over New York City. She has a close relationship with many business leaders. She's also part of the mayor's transition team. Last time you were on with us, it was just after the election. We spent a lot of time talking about politics, specifically housing because of your construction background.
It was a great conversation.
But the New York City side of things, I mean, you've got locations in New Jersey and New York and Florida as well, but you've got locations here in New York City, so you understand the economy. What are you hearing from your New York City-based clients?
Look, I think the economy in general is very strong, but we are, as you just heard, we are on the precipice of, if there are changes that drive the sentiment to think that New York is not a friendly place to do business, we could see change. And so certainly that's a concern. We certainly know there's a concern about affordability in New York City. But overall, I think it's all going to work out. It always has before.
Does it make you optimistic that somebody like Kathy Wild, who has the ear of so many in the business community, is involved with the incoming mayor?
Yeah, absolutely. And there's others who are joining the team who I think we would all say we're happy they're there. Look, at the end of the day, I don't think anybody can argue with some of why this mayor was elected, right? The issue of affordability, trying to make a fairer system for everyone. I think we could all get around that. How we go about doing that is a different story.
How do we? I know we talked about this with you, and
but you're a builder, so that's why we talk about it with you, because you understand these things.
I'm trying to unpack this. I mean, a builder's not going to build a building if it's not going to be profitable, right?
Look, there's been numerous studies across this country and across various time periods. It doesn't matter when, how, or where you look at it. There's a really interesting story right now in the Twin Cities, where one city is trying to maintain affordability by government control, and then the other city is doing it by free market. Let's let the builders build. Yeah. Because to me, some of the laws of economics, they're like the laws of physics. You may like to agree or disagree, but they are what they are. And if we increase supply, we're going to have lower prices, and that's something I think politicians don't typically understand. I mean, if you look right now, even in like the rent regulated portfolio, rent stabilized portfolio in New York City, there's 50,000 units that are unoccupied because they're uneconomical to put back on the market based on what they're rent stabilized at and the investment needed to get them back in order. You would think that would be a priority. We want to get those units back into the marketplace because that would help those who need the help the most.
So if you were advising a politician, the incoming mayor perhaps, or
I'd love
city
the
council,
opportunity to do that.
What would you be
You haven't talked with him?
Not yet.
Okay.
We'll have our opportunity.
So what would be the suggestion to actually fill those vacant apartments?
Oh, there's a number of things we could do, right? We could mean test for the people that live in rent stabilized apartments. There are incentives the city could provide to entice the builders to be able to invest make the investments they need in each one of those apartments to make them viable. Since they're vacant, allow for vacancy decontrol up to some level. I mean, there's so many common sense things that we could do, probably over a dinner napkin, that would get those apartments back online in 90 to 120 days.
So why is this so hard? Is it politics?
It's how politics works. I don't know. And it's a mindset, right? There's a mindset that government can do a better job than the market can do, when in fact, we've learned over and over and over again here in the United States, the market generally is able to solve these problems, and in a very efficient way, mind you.
All right, I want to broaden out. We always do like to talk to you because you have such great exposure to small business and construction generally. How are both of those areas doing? And I'm also curious about small business, as we had a story this week about PayPal looking to apply to become a bank and really tap into the small business area. It doesn't happen overnight, so I'm just curious. You laugh. Do you think that's...
I think it's fine. What I find fascinating is all these companies that want to be banks, because in the current regulatory environment, it's fashionable, profitable, and whatever to be a bank.
Banks have done really well this year.
There are other times in history when being a bank is a little bit more difficult than that. And the banking industry is not just one particular point in time. It's built to last for very, very long periods of time. And so we'll see how they like the regulatory environment at other points.
So small business.
Small business, I think, is doing very, very well today. Again, the noise is out of the marketplace. People are feeling good. I think one of the biggest things we're hearing, notwithstanding some of the employment or unemployment information, is that small business is having a hard time hiring qualified people to fill positions. I think they're getting their arms around what's happening with tariffs. I think they're getting their arms around whether or not there's real structural inflation in the economy, and it appears there really isn't. There's been some price setting that's been going on, but overall, the vast majority of the small to medium-sized businesses that we represent at ConnectOne are doing quite well, and they're seeing. What's more important, they're seeing pipelines and backlogs that are taking them into 26, which is one of the reasons I feel so optimistic about where we're headed in 26.
So let's get to, we got the environment side of this. Let's get to the actual running of the banking business. We saw an uptick this year in M&A. You mentioned a favorable regulatory environment. We saw you guys actually close on First of Long Island. That deal was announced last year.
Yep.
Any more M&A for you in the new year?
Listen, this is, I think, our fourth or fifth transaction we've done over the 20 years that we've been in business. And we always like to say we're very opportunistic based on where we are, where the market is, what opportunities are in the marketplace. We've gone through stretches of 3, 4, 5 years at a time without any M&A. That's okay. I do think there's going to be a robust organic growth engine for us as we continue to move forward. But there could be opportunities for M&A. And right now, one of the things that I think would promote that is a regulatory environment that's a little bit more favorable towards it happening. We did not have that when we announced the last transaction. There were only a few that were done that year. Yeah.
That's what I wanted to follow up on, is that you are in an environment that's much more favorable. So as someone who runs a bank and knows that you haven't done that many over the entire lifespan, but you're in an environment where it is much more favorable.
Well, what's important,
does it make you say, maybe I do something
it's not
more?
so much that it makes us say it, because it has to make financial sense.
Okay.
It has to be something that for us, we can say this is a good opportunity for us to take advantage of.
Yeah.
The better regulatory environment, though, provides more opportunities, because then there'll be other institutions that think they're better off if they partner with somebody. And, in the last 3, 4, 5 years, that hasn't been the case, right? Many institutions are saying, hey, we don't want to take a risk here of trying to sell ourselves or partner with someone, and maybe that doesn't happen, or it takes too long to happen. And they hurt the franchise.
So that's probably a no for 2026?
Well, it's hard to say.
Okay. Well, just geographically, just in 20 seconds, geographically, the most appealing area where you want to be, where you're not right now.
Look, we're a New York Metro, based institution, so that's a big market. There's an awful lot.
So you want to grow here?
Yeah, we want to. And as I always joke here, Florida is part of that market. So I like the growth prospects here in the New York Metro market. I like what's going on in Florida.
Okay.
We'd be remiss in terms of Fed policy and what we get in terms of a new Fed chair. And we did get that additional rate cut last week, Frank. The bank
we said we were going to have a rate cut last time we were here.
Just real quickly, 30 seconds. How's the bank managing the rate backdrop and the steeper yield curve that we're seeing? Just quickly.
Listen, I think it's great for banks, and I think you see it, in the market reaction to banks over the last 30, 45 days, right? Bank valuations are up pretty strongly. Banks are now, favored in portfolios today. I think part of it is the steepness of the yield curve, and I think part of it is the optimism around the economy going into 26.
So still optimistic.
Yeah, very.
Kind of love that, right? We could use some optimism. Frank Sorrentino, thank you. Have a great holiday.
Oh, you
Happy
too.
New Year.
Yeah, really
Fabulous.
appreciate it.
Fabulous.
Founder, Chairman, and Chief Executive Officer of ConnectOne Bank right here in our studio.
Hey, let's get an update on the business day, the trade, as we do get close to, just an hour and 15 minutes away from the close of equity trading. Here he is, Charlie.
All right, I thank you very much, Tim. Looking at green on the screen right now with the Dow, the S&P, NASDAQ, all advancing. CPI Thursday, stocks are advancing as a cooler than expected inflation report lifts hopes that the Fed will cut rates further. Right now, the S&P is up 51, 67.72 where we stand. That is a gain of about 0.7%. Dow Industrial is up 75 now, up by about 0.2%. The NASDAQ Composite Index up 294 points on NASDAQ. That is a gain of 1.3%. The Bloomberg Mag 7 Index climbing higher by 1.9% with a 10-year currently yielding 4.11%. The 2-year 3.46%. Gold is down $8 the ounce, down about 0.2%, 43.29. West Texas Intermediate crude 56.01 a barrel, up 0.1%. And Bitcoin now down by 1.5%, 84,601 on Bitcoin. The activist investor Elliott Investment Management has built a stake of more than $1 billion in Lululemon. Lululemon Athletica shares up now by 4.1%. Instacart shares are lower after Reuters reported the Federal Trade Commission has sent the grocery delivery company a civil investigative demand. The FTC declined to comment but told Reuters it is, quote, disturbed by what it has read in the press about Instacart's alleged pricing practices. Instacart down now by 1.4%. Recapping, S&P higher up by 0.7%. Two key earnings reports coming up after the close of trading. We'll be hearing from both FedEx and Nike. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Hey, a story that definitely caught our attention. Trump Media and Technology Group, it's the company behind Truth Social, getting into, drum roll please, nuclear fusion.
Yeah, this is interesting because they do financial services, they do social media, they have the crypto part of it too.
Right.
The company's saying today it will merge with TAE Technologies, a closely held fusion developer. It was founded back in 1998. The transaction valued at more than $6 billion.
Yeah, we're going to get into this deal next hour, especially the fusion play, the reality of it. But we thought maybe our next guest might have some thoughts as well because they play big time, certainly in the energy space. We head to Charlotte, North Carolina. Ken West, he's president and CEO of Honeywell Energy and Sustainability Solutions. Starting in the first quarter of 2026, this business will be renamed Process Automation and Technology. Ken, welcome to Bloomberg Businessweek Daily. So good to have you here. How are you?
Well, first, thank you for having me. I'm doing great, and it's great to be able to talk to you a little bit about how Honeywell's focusing on continuously providing solutions to our customers around energy expansion and security.
Well, I want to hear about this, and I've got to be fully transparent. My dad worked for the company many years ago, but it was originally Bendix, which was acquired by Allied Signal, which was acquired by Honeywell.
And there you have the history of U.S. industrials in a nutshell.
It's just really wild. I remember it so well, all the acquisitions. Hey, your business, though, a lot of energy exposure. Tell us about it. And lay it out for us, for those who might not be so familiar with the current Honeywell, which right now is divided into 4 units, soon to be 3, with a spinoff later on.
Well, that's exactly right. So at Honeywell, we're continuing to focus on the evolution of energy and how we can provide end-to-end solutions for our customers. In energy and sustainability solutions, we bring more than 100 years of technology across decades of development in determining how we can help solve those world's problems, from originally processing some of the first gasoline to developing unleaded gasoline, and now today developing some of the new renewable fuels that are providing sustainable and affordable options for energy expansion for tomorrow.
You know, we look at, and we talk about this each and every day, but the challenges that we're seeing, at least with energy production and demand here in the United States, and the grid certainly not being able to keep up. Where is the bottleneck from where you sit?
You know, take a look. And first, you're absolutely right. The need on energy is greater today than it has ever been. And as we look out into the long term, we see the need just continuing to grow. You know, many forecasts would put it at anywhere from 20 to 40% growth over the next 20 years or so out to 2050. When we take a look at that bottleneck, it really is in being able to develop the infrastructure behind the scenes that can produce that power. And so one of the first areas that we address that challenge is really in efficiencies. And we really come together at the intersection of the technology needed to produce power and then digital and optimization capabilities with Honeywell Forge that we use to provide sustainable and reliable solutions that allow those refineries to produce even more power than they did before. So if you take, case in point, a refinery that we are able to help become 5% more efficient, do that across 20 refineries, we've created a refinery without having to put any brick and mortar into the ground.
Yeah, I feel like that's, you know, Ken, the next focal point, right? We went, especially when it comes to the AI build out, we went to, you know, chips, the chip play and the data center play, and then it was all of a sudden like the power demands and building that out. But now I think whether it's chips, whether it's power centers, we're thinking about how to make all of this much more productive, because that will help everybody meet the energy demand.
It truly is. It both meets the near-term and long-term energy demand and also does it in a way that's economically viable, which is just as important as coming up with a solution. So one of the ways that we're able to do that is by connecting to our plants. And when we create a connected plant, we're bringing in billions of data points every day. And we're connected today to more than 1,000 process units around the world. And we take those billions of data points and we can provide predictive potential solutions for those customers to improve reliability for tomorrow and to augment their workforce. As I travel around the world, one of the things that I clearly hear from all of our customers is a challenge in getting experienced workforce there to operate these facilities. We're able to take our connected plant solutions that run on Honeywell Forge and augment that existing workforce. So we can take a control room operator that may have a few years of experience and provide them the capabilities of a control room operator that may have had 40 years of experience. That in itself allows our customers to become more efficient and continues to improve both reliability and safety of the expansion of energy.
What's the payout that your sales folks have calculated here? Investing in this solution up front and then the efficiencies that it creates, how long does it take to pay for itself?
Yeah, many of these solutions are very fast paybacks. In fact, we have had opportunities where we can save millions of dollars in operating cost and energy costs that are going into a refinery for, a very small fee that goes into our connected and engineering services. I've seen some of these be anywhere from less than a year to just a couple years of payback in some of the projects that we've provided for our customers. I'll give you a perfect example. One of the things that we've been able to do, we provide catalysts to refineries and petrochemical plants. These are key in making the chemical reaction that actually produces the end-use product. When you take a look at these catalysts, they degrade over time and need to be replaced. In the past, you used to have to take a sample of the catalyst from the refinery, send it to our labs in Chicago. We would do microscopy on those samples to determine the color, the size, how much degradation has happened. Today, we can do this with a digital image right on the plant. We can get an image every day and let that refinery know exactly the right day to change that catalyst over so that they can maintain reliable operations.
All right, that totally makes sense. The more data you have coming at you in real time, we talk about that with economic data. Hey, one of the things I wanted to ask you, Ken, Tim and I spoke with Neil Chatterjee yesterday, Chief of Governmental Affairs at Palmetto, former commissioner, and chairman of the FERC, Federal Energy Regulatory Commission. He was during President Trump's term, and then it carried over a little bit into President Biden's term. We talked, though, about the energy mix that's going to be needed for AI data centers, for increased manufacturing coming back to the U.S., but it's also, this is a global story. What's the energy mix that you guys are planning for? And I'm curious, when it comes to carbon-based fuels, when it comes to wind, when it comes to solar, maybe coal, fusion, fission, nuclear, help me understand what you see as the dominant energy mix going forward. Because you guys have to provide the tools to meet all of those different industries potentially.
No, you're absolutely right. One thing is clear in that the world needs more energy in aggregate. And what we believe is that it's going to take a number of different potential options to be able to meet that overall demand. So we're really focused in three areas. First, we're focused on the optimization of the existing infrastructure that's there so that we can make the existing infrastructure more efficient. Second is that we see a number of transition fuels that are helping bridge that gap that we need in both the near term and long term. And LNG becomes one of those, liquefied natural gas. And in fact, we've put a significant investment with two recent acquisitions, one for the liquefaction process unit that we purchased from Air Products, and the other in a company called Sundyne that does pumps and compressors that are targeted at expansions in the LNG space that are helping to drive expansions in liquefied natural gas. And then the third is to broaden the entire realm of feedstocks that are available. And this not only allows responsible and sustainable expansion, but it also allows countries that may not have access to fossil fuels to also have access to the production of power and energy. This can include anything from biomass and other renewable resources. So we see it really as being across all three, and our technologies and solutions are focused at driving the entire aggregate up.
Hey, Ken, just very briefly, we only have 20 seconds left with you, but geographically, the areas of opportunity for 2026 and 2027, what are they?
Yeah, well, we definitely see significant new opportunities right here in the United States, and particularly in areas like the Gulf, where we're seeing expansions of LNG projects.
Okay.
We see a need for energy security in a number of new geographies around the world where countries want to have their own access to energy. This is across areas like sub-Saharan Africa and the Middle East. And we continue to see growth in Asia. So I would say across our business, we really are well represented as about a third in the Americas, a third in Europe, Middle East and Africa, and a third in Asia.
Fascinating, really cool stuff. I hope you'll come back, because we both would love to. This is something we talk about a lot in terms of kind of our energy transition, our energy demands and needs. Ken, thank you so much. Have a great holiday season. Ken West, President and CEO of Honeywell Energy and Sustainability Solutions. As we said, this unit's going to be renamed as Process Automation and Technology. So we'll be talking about that in the new year.
Hey, we're talking about the trade right now. The S&P 500 still up 0.7%, but off its best levels of the day. The NASDAQ up more than 1.2%. The Dow up just about 0.1%.
All right, I'm Carol Massar along with Tim Stenovec. Let's get to some stocks on the move on this Thursday. Bloomberg News cross-asset reporter Isabelle Lee is in the house. Do we start with something that will make Matt Miller happy?
Okay.
He's
that?
listening.
Many things make him happy. Is it airline?
No, I was going to say
Lululemon.
No, but we'll get to it later.
Oh,
we'll
pot stock.
Pot stock. Sorry, Matt.
That's not even on the list.
It's a surprise.
It's a surprise.
Oh, it's a surprise. Okay,
Yes,
cool.
Because we know President Trump signing an executive order changing the drug classification for cannabis.
To move cannabis into a less restrictive federal category. So
Sorry,
this
Matt.
sets in motion a regulatory shift that could alter the legal and the commercial landscape for drugs. Basically, he's instructing the Justice Department to begin steps needed to shift cannabis to a tier reserved for drugs with accepted medical uses. So I'm looking at Tilray and Canopy, Tilray TLRY and Canopy CGC, but both shares are edging lower by 1.3% and 3.5% respectively, which
It was priced in.
maybe that's
Weren't
a good
they-
explanation
weren't they
too.
higher
I mean,
earlier,
look
though?
what happened earlier this week. Look what happened last
They were
week. How
higher
many
earlier.
days have these been gainers where I'm like, Carol,
Yes.
you got to do pot stocks?
Yeah, I
'cause
mean,
this
it
is
was
gonna
up-
happen.
They slipped into negative territory.
Tilray was up 22% earlier today.
Yes, and now maybe it's priced in. It's down 3.18%.
Gonna have to cross that up off my gainers list. To be clear and fully transparent, Matt just likes to talk about it. And
Okay.
so I just don't want to,
Good, that's a good save. I like talking about it. Pot stocks. It's just
Who
fun to talk
doesn't like
about.
talking about them?
I like talking about chips.
Do you?
I like talking about chips.
Sounds
yeah.
like we go to Micron.
Micron. I love this rumble jumble. So Micron ticker is MU. The stock is up by just 11%, and that's after the chip maker gave an outlook that was 80% higher than estimates. I was here yesterday and we were talking about it, and the optimism is continuing. This is the highest in at least 8 months, and the stock is up by nearly 170% this year. So the CEO of Micron said it's positioned as an essential AI enabler. And again, we were talking about this, Carol. It's because of the intense demand, and supply can't meet it. And it's good for Micron because then it puts them in a good spot.
Totally.
Okay, before we let you go, just give us 20 seconds on Lulu. Shares are surging today.
Shares are surging. I love Lululemon, the product, but the stock is up by 4%. We have news that activist investor Elliott Management has built a stake of $1 billion in the company. And this comes after the company has really been struggling to turn around their business after the exit of their CEO. Elliott for months has been working with Jane Nielsen. So she's the former CFO and COO at the Ralph Lauren. In fact, sources told Wall Street Journal that they want Jane Nielsen to potentially be the CEO.
Yeah, that I love. I think that's
Well,
an
there is a
interesting
job
story.
open there.
Yeah, exactly.
Yeah,
We're
we
going to
can
talk about
apply.
that too a little bit later on. Good stuff. Really fascinating. Isabelle Lee, thank you so much. As always. Don't forget to use that Lululemon credit, right?
Yeah,
Amex.
$75 this quarter.
Hey, Stock Movers
I
Podcast.
used it already.
Did you? I have not. Stock Movers Podcast, 5-minute episodes, biggest winners and losers. Find it on Apple, Spotify, or anywhere you get your podcasts. On TV, the close coming your way. Tim and I continuing right here on radio.